top and bottom line estimates. The conference call kicks off later this hour. For more, let's bring in CNBC's Steve Kovac. Steve.
Yeah, on the surface here, you got beats across the board, Melissa, but you see the stock still down. EPS was a beat, revenue was a beat, and even Azure cloud growth was a big beat here, 40% compared to the 38.2% expected. But it's really unclear what's dragging the stock lower. Intelligent Cloud only beat by a tiny bit, perhaps also a run-up of the shares into earnings. They hit that $4 trillion market cap as well this week. Maybe beating expectations, but not annihilating them was part of the thing here. Now, look, we get the call at 5:30. We're going to get guidance. We're going to get CapEx spending estimates for the December quarter and a read on when Microsoft is going to catch up to AI demand. That was supposed to happen by the end of this year. One other interesting nugget here, guys, to talk about: the OpenAI stake. That resulted in a $3 billion negative impact to net income. So the losses at OpenAI are starting to drag even more on Microsoft's net income, guys.
All right, Steve, keep us posted. Thank you, Steve Kovac. This is the trick with Microsoft. The call doesn't start till later. We don't have guidance, so I don't know how we trade it. But, Guy, go ahead.
Well, there's nothing not to like here. I mean, it's a tremendous quarter. I mean, I just think it came down to valuation. Not good enough at this valuation to get the continued move to the upside. People will point to the technical levels that we just stopped at. It was a prior high we saw a month and a half or 2 months ago. So technically, maybe it sort of made a bit of a short-term double top. But, you know, again, it's a valuation thing. It's not anything to do with the quarter, because I think the quarter is very good.
Dan?
Yeah, you know, we go back to last quarter, and the stock had a huge gap. It just looked like you could not find anything wrong with that quarter. The stock opened up 8%. The first tick the next day was that all-time high, and then it closed that day on the low. And then for the next, I want to say a couple weeks, it just didn't see an uptick, and then it consolidated. So we had this recent run, and I got to tell you, the recent run over the last week or so really felt like a bit of a blow-off top. Some of the names that we've seen just blow out that are just down the stack as you think about, generative AI, and some of these larger ones are getting harder to push around, ex-NVIDIA, I guess, because that didn't have a hard time. 78 days between going from $4 trillion to $5 trillion in market cap. So, pretty astounding. I would also mention that NVIDIA, with all this stuff, is not up. It's just trading flat. And it was having a good day this morning. It traded, closed pretty well. So NVIDIA, to me, is going to be a really interesting one to watch, because if you're looking at Microsoft, you're saying, I can't find too much to pick at here, and it's down a little bit. Right. At some point, something's got to give in the NVIDIA trade.
The bar was not high going into this quarter for Microsoft necessarily. I mean, it wasn't ramp higher or anything like that into earnings.
Right. I just want to talk about something Dan brought up. So NVIDIA is actually a little bit lower. AMD is a little bit lower. Oracle's a little bit. So I don't know if they were front-running this expectation of all this additional spend. And the idea of it doesn't matter who gets a new deal, everybody trades up now. Right? We saw that with AMD. That's sort of an interesting phenomenon that I actually find a bit troubling.
Yeah. You look at these earnings that we have so far, Michael, and I know the conference calls aren't complete. They're not ongoing. But what is your takeaway at this point in terms of big cap tech, the ability to lead the markets here?
Yeah, I think, listen, much of what we've seen over the last 3 or 4 months for me has not been earnings driven. It's been more liquidity driven than anything else. And so now earnings have to basically catch up to this massive liquidity driven rally that we've seen. And so regardless of the expectations for earnings, I think it's actually, because the price appreciation has been driven by so much liquidity, you almost have to beat the liquidity expectations in a way, right? These new expectations set because of liquidity. And that's going to be really, really hard to do. Going into this earnings season, I think the number one Mag 7 last 12-month net income year-on-year growth guy was number 75 or something in terms of S&P 500 companies. There are a lot of other companies growing more than Mag 7, and I have a suspicion that after this earnings season, we're going to see a continuation of that broadening in earnings growth.